Hello everyone. Welcome to another topic of unit of technical analysis. Here we are specifically talking about measuring RSI. Right now, let's go first of all to the chart. Right here, I've done certain Fibonacci's which are there. Now let's talk about measuring RSI. We at unit of technical analysis would like to measure RSI in terms of points that we will be able to get. If you are not able to measure it, it's probably more of a lesser probability or maybe something called as gambling. This is what we believe. So it's always important to have measurement. That's why we have called this channel as unit of technical analysis, where we have a unit, and on the basis of that unit, you are able to measure all the validity, volatility, or maybe points that we'll be able to get. Now, how to do these measurements? Let's try to find out. So first of all, let's try to find out what exactly is RSI and how to measure that. Now, what do you mean by RSI? Right. So RSI is relative strength index. That is the first part. This is a momentum indicator, right? Now we have previously seen that there are four types of indicators which are there: trend indicator, momentum indicator, volatility indicator, and volume indicator, right? From these four indicators, we are here talking about momentum indicator, right? So we'll try to focus on that. Let's try to see what exactly is RSI and how it functions. We'll see to the formula and rest of the things also, right? So this is a new chart. This is not a saved chart or something like that that I'm talking about. Absolutely new chart, right? Here we have taken monthly, and let's see how we are able to get RSI. So we go into the indicators part and we type out RSI. You can type out RSI or you can type out relative strength index also. Either of them is going to be the same thing. Right? Type out RSI, you get the same thing only. That is relative strength index. Right? So I click on that. What do I majorly see on this part? Right? So there are points which have been marked from as low as 28. So it starts from 0, right? And on the maximum top part, it goes up to 100, right? So any price action that you see would be always in between 0 and 100. It won't be going anywhere beyond above that. So it's nothing like you have an RSI which is 120, 130, or maybe something in minus, right? Why I'm specifically talking about this is you have a tool by the name of MACD also, which is also an indicator, right? That goes in negative, that goes in positive also, right? So just to differentiate between those things, there is something called as RSI, and this is between 0 and 100. This is the first part, right? Now let's go to the standard parts which are there. If you see in inputs, you'll be finding the length as 14, right? So this is a standard which is being generally used by all the people who are there. I mean, like most of the part, not all of them, right? So this 14 is maybe more of on the basis of lunar cycles, right? And second, we have something called as style, right? Now, what is this upper limit and lower limit, right? Upper limit is 70 and lower limit is 30. These are the two parts which are there, right? Now, let's try to understand what these two things define and what they talk about. So here it is already marked as 30 and here it is already been marked as 70, right? So this talks that, okay, whenever the index or the stock crosses above 70, it is generally been assumed that it is there in an overbought zone and it should come down from that zone below 70, right? So this is about being overbought. Now, not necessarily it would be there in that part that it should be whenever it is overbought, it should be coming down. So it can also go up above that also. Of course, for a short time period, it doesn't go for a longer time period, but whatever time frame we are able to trade, definitely that is going to be an advantage for us. Second is anything below 30 is oversold zone, right? So it may happen that if it is going below 30, it may come up also. So it's, if you want to see that, you can see in daily time frame also that, okay, fine, it has been coming up below 30 and then again going up. right? So this is how it is. Now, generally, people also assume that you should be having a range between 40 and 60. Above 60, you can trade above that. Going above in terms of price action, below 40 is been again considered that it is 40 to 60 is a zone where you know that okay, it doesn't go above that or doesn't go below that. It's more of range bound, you can say, and anything below that probably you have to sell it. Anything above 60 you have to buy it, or maybe other types in which you can trade RSI. But let's try to focus on what we are going to do, right? So what we do is, first of all, we change RSI to 36. The main reason behind 36 is if you are a long-term player, it gives more of a stability to you in terms of 36, right? So if it is 36, you change this to 64 and the lower limit is 36. So this is the first change that we do. I mean, of course, I follow more of WD GAN, so that's why those changes come as per the numbers which are there, right? The rest of the parts do remain the same. Only we have made a change in the length which is there, and the upper limit and the lower limit is 64 and 36, right? By doing this, what we assume that we are able to get lesser signals, not more signals, lesser signals, which are more accurate, and we are able to trade on the basis of those signals. Yes. So as we saw over here, probably if you are able to trade those, you would be also able to get measurements of RSI, just as we saw for price. So this can also happen. We need to study that, how we'll be able to get this kind of trades also, right? It may happen that for every time frame, it may vary. And for every time frame, it is again going to be in the same range between 0 and 100, not beyond that, right? So it's not like that, that if the price is going up, probably RSI should be also crossing with that. No, it's not in that way, because the formula is totally different. Let's look at the formula also. So this is the formula for RSI. You can go into the details of that. You'll be able to just get the details on Google. Just Google it across. Here, for example, I have checked it on Investopedia. So I got the formula details, right? Again, as it has been told, it is a 14 period which has been standard use, and RSI, if you see, it is 100 minus rest of the parts, which again takes into average gain and average loss and rest of the parts. So that's how it is. There's also given an example, right? But rather than the technicalities of how exactly the RSI has been done, it's more important for us to use the RSI, right? So here all the things will be given: overbought, oversold zone, how it is to be used, right? So let's talk about some important things. One is, first of all, the time frame, right? Because it depends on the time frame that you are using, and you should be always majorly seeing for the time frame in that. Let's say, for example, we are talking about daily. So when I'm talking about daily, I should be using a daily time frame more of. And when I want to get into the details of that, probably I'll be getting into a smaller time frame, less than a day. That is maybe hourly, or exactly to point out, I'll go for into minutes time frame also. So that I get the exact variation in terms of price action, and then I'll be able to trade on the basis of that. This is how I generally do and find out the price action. Now, again, one more important thing that we need to know is RSI is an indicator, right? So it's not a confirmation. Always understand, very important thing is, these are all indications which have been given. This is not a final confirmation. Final confirmation for any of the parts would be always in terms of price action. For example, here, if you see, right, the price has been generally moving up, right? So RSI is generally been in a range bound way. It is not moving up while the price is also moving up. So I always get a confirmation of trading in terms of, let's say here, in terms of price action that we have previously seen, right? Or maybe on the higher time frame, higher points. So it is always there, and your confirmation should be always in terms of price action confirmation, nothing less than that. This is very important to understand, right? So apart from these things, there are something important which we need to understand. First of all, what is that is how to trade on the basis of RSI. Now it's not necessary that you should be trading only on the basis of RSI. You can use other indicators also. For example, if I see from my side, I use other indicators, which is RSI, MACD, and also moving average. So moving average is also been used at times, which I use. Right. So all these things have been used together. Of course, I use other indicators also to get a higher probability of trades, which is Bollinger Band also, or maybe others. I'll definitely will talk about them one by one also. Right. So it's not necessary that you should be trading only on the basis of RSI. You can use other indicators. Of course, you should be using other indicators also together with that. But when I want to trade out, what I do from my side is, let's say I found out in terms of price action that okay, fine, this is going to go down. So I check with RSI also. So either it is in terms of price action which is there, right? Or on the basis of divergence. Now, what is divergence, right? We'll talk about two divergence. One is bullish divergence and second is bearish divergence, right? I'll just write it down also so that it becomes easier for people to understand. Divergence is bullish and second is bearish, right? So it can be bullish divergence, it can be bearish divergence. So now what is bullish divergence and what is bearish divergence, right? Now, first thing is, let's say, for example, here we know that the price has been moving up, right? We see that the price has been continuously moving up. Now, is it the same which is there in terms of RSI also? Let's try to find out. Now, if we see over here, probably from this point to this point, or maybe this point to this point, either of them, right? Here the RSI has been 73.756. So you see RSI over here, the details which have been given for that value. So it is 73.7571, and here it has come down to 72. So we say that the price has somewhere, the RSI, the strength of the RSI has gradually come down, right? But in terms of price, if we see, the price has been going up. So somewhere we see this kind of changes which have been happening. And this change is called as a bearish divergence. Now, what do you mean by bearish divergence? Is the price is going up, right? The price is going up, but in terms of RSI, the values has been going down, right? So what happens is divergence is basically it is going in opposite direction. When the price is going in one direction, that is upward direction, but the RSI has been moving in an opposite direction, that is downward direction. So this is called as divergence, going in separate ways, right? So this is called as BERSH, bearish divergence. So this part is basically called as bearish divergence, where price has been moving up, but our RSI, the strength which is there, that has been going down. So whenever we see this kind of things, probably we'll wait for the exact price action to happen, because This is just an indication which we have got till now. Always remember that we would be able to trade on the basis of price action only, not on the basis of indication, because this is only an indication which is being given. So after this, whenever I get those price actions here, for example, I got a price action which we see in terms of unit of technical analysis, then probably I'm able to trade for downward direction. So this is how we have to do. We saw an example which is there of bearish divergence. We'll also see an example which is there of bullish divergence. Right. Now, if you see over here, the price has been gradually coming up, coming down. Right. But gradually over a period of time, if you see over here, right, you see a sudden increase. Right. And after that, what you see is there is a gain of momentum in terms of RSI, which has been going up continuously. Right. So price has been coming down gradually, but we saw that in terms of strength of RSI, this has gone up. So from maybe probably 2-3 days onwards, it has, or probably from this point onwards, it has gradually started going up. So this kind of divergence we need to check out, and we come to know that, okay, fine. Now, the price over here had been coming down, but the strength over here has been gradually going up. So price has been going down, so that is in downward direction, but our RSI strength has been going in upward direction. Right? So this is again divergence, and this kind of divergence is called as bullish divergence. We will write it down. That's bullish divergence. So we saw two examples. One is there of bullish divergence, right? And one example which was there of bearish divergence. Now, apart from these two divergences, which are bullish and bearish divergence, we have something called as hidden divergence also. Now, what is hidden divergence? Let's try to find out with the help of an example. Right? So what we saw is probably the price over here had been coming down. Just mark those points so that it becomes easier for us to understand. Right? So let's get into the detail. Right? Now, if I see at this point, probably when the market has come down, the RSI was 62.7155. Let's consider it as 62. Right? Now, after that, the price has started moving up. Right? With this part, probably the RSI should also be going up. Yep. So it has been moving up. Here it was 71 and here it was 73. So of course, with the price, the RSI has also been going up. Now, what happened after that is probably, let's say at this point, we got an RSI which was 66. Again, 66 is higher than 62 over here, right? If we see in terms of price, probably I'll just mark a line on the basis of closing. Right? So what I see over here is after that, the price did gradually come down, right? And the RSI with that also had come down, right? Now, if I see, firstly, these 2 points, right? There are two important things that we need to see. First is price. The price has been the closing basis price, which you are able to see over here. The closing basis price has been 13,328, while the RSI has been 62, right? 62.7. Now, if you see over here, the closing basis price has been 13,634, right? And the RSI has been 53, right? Now, if I see in terms of price, yes, this point, the closing of this point has been on a higher level than this, right? So, of course, price has been going up. This is what we understand. And the closing also has been on a higher level. So, this is low, this is higher low, right? So, we consider that, okay, this is a bullish trend, right? But apart from that, we get one more indication, which is in terms of RSI. Now, what does the RSI signify to us? Here it has been 62, but here it has gone down to 53, right? So technically, this RSI should be higher than this part, right? Because the price has been high, but it hasn't happened in that way, right? So what happens over at this kind of things is your price has been moving in one direction, but probably your RSI has been again moving in opposite direction, right? Now, this is not a bullish divergence or a bearish divergence, but this is something called as hidden divergence. I'll just write it down. So, what does hidden divergence signify? Hidden divergence signifies continuation of the trend, right? For example, my trend over here has been in an uptrend, right? We see that everything has been moving up, right? And after that, I see a hidden divergence. So hidden divergence always says continuation of the trend. So if it is in an uptrend, it will continue to move in uptrend. This is what hidden divergence talks about. Let's see one more example at the same part, right? Again, if we see in terms of price, even if we see consider the closing, I'll just make a darker line so that it makes or mark just changes, right? Again, if we go to the same point, the RSI here has been 53, right? Now, if we look at probably this candles, right? Let's mark those in terms of lines also. So here, if we see at this line, right? The price again has been higher, right? The price again, the closing in terms of closing has been a lower high, right? So what does this see is you had a low, you had a higher low. Sorry, it's not lower high, it's higher low, right? So the closing again has been higher than the previous low, right? So it says, okay, the trend continues, right? Again, it gives us a confirmation in terms of RSI also, where the RSI over here has been 53 and the RSI at this point has been 48. So technically, RSI has again moved down, right? And it gives us an indication of continuation of the trend that we saw, right? So hidden divergence, what it talks about is the trend which is there, it keeps on continuing. This is what we simply understand from hidden divergence, right? So we saw three important things today on this the parts. One is we talked about bullish divergence. So what is bullish divergence is? The price is moving down, but the strength, that is RSI, has been moving in opposite direction, that is in upward direction. So it says that you would be getting upward movement, that is a bullish divergence, divergence towards bull sides, that is called as bullish divergence. But again, if you want to trade, the trading is again on the basis of price action. For example, this is a low that we got, this is a high that we got. So whenever it gives me a reversal, after that only I would be able to trade. I won't be able to trade directly at this part, right? We saw that in last maybe somewhere around in moving average or trend, where we said that okay, if we are getting this kind of candles, after that also we are able to get a reversal. So it's much more easier to trade on the basis of reversals rather than the high of the closing candle, which is in terms of morning star, right? So here we see first thing is bullish divergence. We trade on the basis of price action, and after that we start moving up, right? Second is we saw a bearish divergence. Bearish divergence is price is moving up, it is going in upward direction, but my RSI is been going in an opposite direction, which gives me an indication of bearish movement further, right? But this is only an indication. My price action or my trading would be on the basis of price action. So first of all, it goes down, it gives me a reversal. When it gives me a reversal, I trade on the basis of that, and then it starts moving gradually down. So it depends on your time frame. Probably if you are going for a higher time frame, you can go for higher indication into the market, because market every now and then always gives you an indication. It doesn't move anywhere in any direction until unless it gives you an indication, right? So again, it moved down, it gave an indication of upward movement, and then which was a reversal, a retracement, and then after that it started moving down. So you'll always find these cycles which have been happening, and with these cycles you can definitely see changes in RSI also, right? And third important thing, that again trading is in terms of price action confirmation. This is again an indication, as I told you, right? And third thing that we saw is was hidden divergence. Hidden divergence is indication of continuation of the trend which is there. For example, here we saw that the trend has been uptrend, right? After that, we saw a hidden divergence. Hidden divergence is the RSI moving below the low of the previous RSI, even when the price, the closing has been on a higher side than the previous one, which is a higher low. So here we got a higher low, here also we got a higher low. But if you see in terms of RSI, RSI here has been 62, RSI here has been 53, and if we go further, RSI had come down further to 48. So these are indications of continuation of trade, and you should, whenever you get some kind of hidden divergence, if you are in long trades, probably you can just continue. Why? Because the price will be then moving up, because we already got a hidden divergence, right? So that's it for this part. We'll continue this in the further parts. Okay, if you have any kind of doubts, please do comment in the sections for the YouTube videos, or you can also see things which are there in our Telegram channel, which is Unit of Technical Analysis. Thank you so much, everyone. We'll meet in the next part.